Let's amplify this. Again, this is a little reminder. If you guys are learning today, if you like this kind of stuff, because when I don't see a lot of thumbs up, and I'm teaching stuff that I never really wanted to teach, it kind of makes me feel like, you know what, I'm gonna slow my roll, and I'll just not be so forthcoming with the information, because it doesn't cost you anything to do a thumbs up. But I like seeing that, because I know if I got 100,000 views on a video and 175,000 views of a lecture, and I see like 10,000 likes or 5,000 likes or 6,000 likes, to me that's a little insulting, because I don't need to be here. I could very easily say, Caleb, fuck these people. I don't like what I'm doing. I don't feel encouraged to do it. It's free and they're not appreciating it. And it's kind of like a FU or a middle finger to ICT when it's like that. That's how I view it, because you're not going to get this information from anyone else. They're not going to explain it. They're not going to give you the details. They're not going to give it in a way where you can use it and know how to do it without me ever teaching it to you again. That's how I'm teaching it. There's no catch here, okay? But I understand that it's the mentality of most people today is, you owe it to me. I don't owe a fucking thing to anybody. But I had a guy leave me a comment saying, hey, when you say fuck you, we have a lot of students that really like you, and they might think you're talking to them. In this regard, I am. Because if you're watching my stuff and I'm pouring my attention and time into my son, and I'm making it available to you, I know it works. You're watching it unfold live over the charts. There's nobody else doing that. So if the logic is real and it's valid and it repeats over and over again, and I'm telling you the why, that way you learn how to use it, trust it, and then you can anticipate it. How to know how to find it on your own. That's what mentorship is. It's not me out here demonstrating my toys. It's me teaching my son in your witness. So when he's duplicating these types of things, you were there as he learned it, how he learned it. There's no secret lessons. Look, I'm 52. I'm running out of energy here. So I'm pouring everything into this. It's not going to be anything outside of this, because I'm pouring hours and hours, and I got people complaining, your videos are too long. Well, then break it up. Nobody says you had to sit down and watch it in one setting. That's the problem. You're trying to rush through it all. But the fair value gap is this. We have one single pass. The shaded area is highlighting this candle to that low of that candle, okay? I don't care about anything else except for that candle's low, because there's no volume imbalance there. See that? No volume imbalance. We're part of the sell side of the curve. We're dropping. I want to see it stay low. I want to see it stay low. So I am only interested in technically seeing, I don't really have that highlighted. I'm going to take this 6 o'clock price off. So I got to remember how many steps I do, so I can do Control Z, it'll put it back. Meaning this. So if I take it off, and then I'm going to add the midline on this. So that's how you do that. And I'll make it black because I want to make it pop on the chart. So all things being equal, no wick discussion. It's just this fair value gap. What we're talking about is it's part of a sell side delivery. It's part of a sell program. The market's reaching lower for sell side or a discount inefficiency. I took your attention to the midpoint of that 830 gap, which is here. I forgot to change the color. So if it's going to trade up into this inefficiency where only one candle passed, so between this candle's high and that candle's low, it only went down one time in one candle for 1 minute. That's inefficient with buy side. Buy side is where price is offered going up. Buy side liquidity is where it's reaching for while it goes up. See? Buy side liquidity are actual pending orders in the marketplace, either to buy into a new long position or to buy and exit a short position as a stop loss being activated. I'm looking at that high right there, and I want to be a short seller generally on the fair value gap. I'm trying to put my limit order at that price or one tick above it. That's my first 6 contracts. That's my model. And then if it can trade up into the midpoint, or as it starts to slide towards it, then I'll throw in my 4 contracts. So what does that give me? It gives me 4 lots. That gives me a total position so far, scaling in 10 contracts. I am not inviting you to trade with 10 contracts. I'm not saying that you have to trade with 10 contracts for it to be profitable. You should only be watching price action, Caleb, and saying, okay, this is where we're eyeballing it and saying, I want to see how it behaves once it trades there. Does it go all the way to the midpoint? Does it go all the way to the top? This is permissible. Remember that term? It's something that is allowed to happen, and it doesn't change the underlying direction or where the market's going to go. It just means that this is possible to happen. It doesn't change anything. It's better, it's much better if it only goes to half or less and then does this, because that means it's really, really weak. But because I already expect it to go lower, this is just an opportunity for the market to reprice to that level right there. That candle's low. It doesn't reduce the effectiveness of the trade. It doesn't make it more profitable or less profitable. It just gives me as a emotional and psychological comfort that I am on side. It's going to start really running away quickly after it rolls out of here and doesn't go in the upper half. So meaning this, if it's like this portion, like say it's like that much of the gap, doesn't get traded to, and say this wick only went up to like to here, but left all that shaded area open and not touched that high, and then it did this price action here, that's usually, if you watch my examples, and you'll see me talking about it in real price action when we get through the August content, and then we start looking at minute by minute, second by second candlestick, and then what you're observing, Caleb, what to anticipate, what it should do right now, not the overall grand scheme of how to reprice and where it's going to go and how to behave in those ranges. That's what we're doing right here. This is the beginning point, and it's not a one module lecture. There's a lot of, clearly, as you can see, there's a lot of things that you need to weigh out if you really want to know what price is doing, how to trust that you're going to be a part of a trade and hold on to a trade. I've answered so many questions already in this lecture that have been brought to me over the years constantly. But I want, if I'm shorting a fair value gap, I want to enter at that old candle high. And by the very nature of it, that's a turtle soup. You're going short above that high. You're trading in an area of inefficiency, and you think this is turtle soup. You think it's this. This is dollar mentorship menu memberships where they're trying to teach you this stuff. The Wish version. Why you gotta go there, ICT? Why you gotta start some trouble? You're always trying to bring a ruckus. No, I'm trying to remind these cats that they don't know shit, and they're pretending like they do, and they're hurting people. You're messing up people's expectations and understanding, and they're actually prolonging their learning curve, because they got to learn that horse shit first and realize that they just watered down something and taught it incorrectly, and they come back to me, and then they're like, oh man, I wish I would have just started with you. Right? Whatever. You can eat where you want to eat, but you think this is turtle soup, just a high, pierce above it, and then there it is. But that is true here. That's a breaker. Breakers tend to be turtle soups in changing directional sustained price runs, where you have high, low, higher high. There's your breaker, but the essence is a turtle soup. That is not what's going on when you're using as a trade entry that's part of an existing or underlying or unfolding sell program or buy program, because you're looking at one single candle like this, and you have to get above that candle. Well, how far can it go? See, it's going to be harder for you to do these entries here, because as it's going up like that, you're not going to want to stand in front of that. It takes more experience learning the things I told you this level yesterday. And I know you probably didn't watch the video. Some of you are just looking at this one, or you didn't watch the entire video yesterday. You heard me talk about other things, and you're like, okay, he's done teaching. I'm not. Everything I said yesterday was valuable. You might not see the value in it now because you have a myopic perspective. But these levels were given to you yesterday. And the market goes up into it, trades to it, and then rejects it. It takes a whole lot more understanding and a whole lot more complementary understanding with other PD arrays to do these types of trades selling right there. And you've watched me do examples of that. It's on Twitter. Go look at it. There's examples of it on my YouTube channel too. Look in the executions, live execution playlist. You'll see it. It's there. But these are the more advanced ones. These are very, very demanding in your understanding. The fair value gap, which many of you are real accustomed to now, you're comfortable with it. What you don't realize is you're doing the same thing here. That high is here. This high is here. The difference is this is a visual aid in telling you how far this part of this run above this old high here, which is this individual candlestick. How far can it go, ICT? Where's too far? Too far is going above this candle's high. That's a stop loss. Entry here. Stop loss here. Now, that's the baseline entry strategy and where stop loss would be. Take it one step further. How can we take this to an amplified, advanced ICT mentorship video? This is a charter level content. This whole video is really, this whole stream is a charter level. My charter students are fucking tickled to death right now. They're like, man, this is the shit. Man, we've been waiting since 2016, and here he is out there now doing it. Oh, man. They love it. You should see some of the shit they're saying. What do we have here? What is that? Let me move this out of the way so you can see. What's this part right here? Isn't that a wick? Oh. Well, let's use that information because that candle is the high end of the fair value gap. Pattern is 3 candles. It's this one. That's candle 1. Here's candle 2 and candle 3. A fair value gap, the inefficiency, is always candle number 2. If it's a down closed candle, it's a sell side imbalance, buy side inefficiency. SIBI, SIBI. If it's a fair value gap that has an up closed candle, it is a buy side imbalance, sell side inefficiency, or a BISI, BISI. Candle number 1. If candle number 1 has a wick right here underneath it, that is a premium array. That means it's it's above the fair value gap and it's trading up to here. You're thinking I'm going to get into a trade here or at the midpoint, and you want to see the upper half of that stay open. That's this area right here. Classic fair value gap, where you start, Caleb, when you're studying this, you want to be observing price action and you don't want to see it trade to this high right here. Okay? In other words, this is what it looks like. This is the framework. So that way you can have screenshots of it. Man, I'm so nice to you. This is stuff I did not want to teach. I did not want to teach it. You're an asshole. You should have wanted to teach this. No, it's too good. And you think you like this stuff. You ought to see the stuff that I'm never going to teach. That makes me. All right, so we're going to do top, right. That seems like it's probably going to be too much. Yeah, it's good. So stop loss is here. And the entry would be here. So you're going to watch this level, Caleb. This is your entry. Let me thicken it up a little bit. And we'll make that this color. Man, this is a long video. Go watch somebody else. I'm here teaching my son how to be profitable and how to read price action. You don't want to be here for that? Go do something else. So entry's here, stop loss is here. That's the methodology, okay? Advanced version, okay? How do you mitigate underlying risk? How do you reduce risk? How can you use smaller stop losses? How can you make your stop loss really tight like this? How do you know that these stop losses aren't going to get hit? How do you know, ICT, when you're holding, dude, bro, the stop loss has me in tears. Oh, I'm dead. The stop loss killed me. And that's all the comments. When I'm sharing examples, when you see me using the stop loss placement, I'm going to show you one element to sometimes, not all the time, there's a lot of things that go on based on individual trades. But initially, Caleb, when you're watching price, not taking trades, you're watching it enter. You're thinking, okay, I want to see how it behaves here. If it goes there, I'm expecting it to go halfway, no more, but leave a portion open. But if it goes up there, then you demand immediate response where it needs to drop, okay? If it doesn't completely come back to this candle's low and it leaves a portion of that open, that's what you want. And then you anticipate very fast speed and big, large range candles going lower. After it trades to that candle's low, like that. Once it does that, then you absolutely demand immediate response, and the same thing happens. In my videos, you'll see me say, I want to see speed and distance and large ranges going down. And then you get it. That's qualifying and quantifying the setup real time as it happens. You need to be doing those things while watching price, not entering a demo. Not entering a demo, not pushing any buttons. You do this for months. You observe and you watch, and it teaches you and trains you to see, oh yeah, this is what it looks like. It's going to behave this way. And then when you start using the elements I'm showing you here, you start with this price level plus 1 tick. If it can trade there, that means it's got to go 2 ticks above that. If it books that price, you hypothetically say you would be in a move, but you're not even demoing it. You're tape reading, okay? You're watching and observing. And then at that point, once it does that, hypothetically, you would be in a trade, whether demo or live, using that logic. So you do not want to see it book that candle's price high. But what happens if this is a little too rich for you? You don't like that. It's too much range. How can you reduce it? Well, if you have this candlestick number 1 in your fair value gap, if it has a wick like this is a premium array because it's going to be trading up to it. You don't want to see it trade there, but you can take that wick and do this. There's consequent encroachment of that wick, plus 2 ticks. There you go. The market will run up here. At one point, this will be a bold-faced bullish candle. You'll shit yourself, okay? You'll be scared. Some of you watch my live examples of trading, and you watch it and you're thinking, oh man, this is going to get stopped out. And then all of a sudden it doesn't. How do I know that? I'm doing things like this. But you don't want to hear me. You don't want to learn because you want a little video, something that tickles your ears and gives you right now little thing talking points so you can go around and start talking like you know something when you don't. I want you to know it. I want you to understand it. So by examples of things like this, it affords you better, efficient stop loss placement. You're not fearful. Why would I fear this never being hit? Because it's 2 ticks above the midpoint of this. This candle opens and trades down. Isn't this overlapping that candle's low when it does this? So essentially, what is this area here? It's a balanced price range. Balanced price ranges, we don't ever want to see it go down, start here, go back over, and then come all the way back to the top. If it does that, it's probably going to go higher, and I don't want to be in that trade. So I don't need to put a stop loss up there. I can be just above the consequent encroachment of that wick because it's a gap, just like this is a gap. Okay? So anyway, that's the business there. So now I've taught you how to trade and how to enter a trade stop loss and how to also use a very, very small stop loss. I've also taught you today how to anticipate when the market's going to run and be aggressive and start creating large range candles. There's only 2 circumstances that cause that. I taught you both of them today. when you leave a gap opening or if it closes the gap. If you leave a gap opening and it's the upper half when you're bearish or the lower half when you're buying, once it leaves it, it needs to accelerate and move away. And that's true. But if it goes up and fills the gap in entirely like it does there, it must immediately give you speed and distance in large range candles moving away from it. And then once it takes out this low here, that's now we're in a new range low. Let me put more data on the chart. You're learning some shit today, ain't you? Man, I wish you would have taught like this the first time, ICT. See, they can't be happy. They're never going to be satisfied. Instead of saying thank you for teaching it, they're going to say, I wish you would have taught like this the first time. You're a dick. Oh, shit. You can't win with some of these guys. So anyway, we were looking for this level here. We had the response as we were looking for it and traded off here. Once it takes out that low, if you see that happening, in your mind, Caleb, you would say partial there. Even if you had single contract, partial there, and you screenshot it as it trades below that. And then you watch and observe. How does it behave? How does it behave? Goes up one more time, bumps into it, and drops away. Comes back one more time. I gave you the order block here. I said, we do not want to see it trade above. Go back and watch the live stream. I know you can't rewind it right now. And I'm not going to change that because when my son's watching live data, I don't want him to be able to rewind or change anything. He has to see it as it's happening. And if he isn't watching and paying attention at the time it's happening, he's fucking missed it. Just like you. You've missed it. You've missed the opportunity. You've missed the opportunity to study it real time. It is what it is. There is no DVR advantages here. This is the way it is. You don't like it? Go watch somebody else. I'm not in here trying to make everybody happy. I'm here training my son. This is what it is. But he's in the fucking dungeon now. So this candlestick, I told you, that's a bearish order block. We have a fair value gap there. I don't want to see it trade above it. We already outlined and showed you. That it didn't do it. See that? So if you were going to trade the order block, say that was going to be your methodology and you were using that here, okay? Where would your stop loss be? This is a real challenging question for some of you that haven't taken notes today. For those that have been taking notes, this is a pretty easy one. If you're looking at this bearish order block, okay, it's part of the run that's going lower, okay? This is the midpoint of that wick at 8:30's candle. We are exploring the likelihood of it trading lower. We're part of a sell program. That means it's going to most likely continue dropping lower. Okay, so it's only coming back to that midpoint to do what? Offer fair value. So if it leaves it like it does here, it starts to trade back up, that right there is your bearish order block. This is where the algorithm gives little, like a mile marker, like a bullet point, or an exit ramp, or a traffic control device if you're a professional driver. A notation, if you will. This is where your eye should go to. Okay? And that range gives you the levels to trade on. If you have not been a participant of the trade yet, you can use this up close candle to formulate an entry. But where does your stop go? It needs to be above this candle. Okay? It needs to be above it. But where? Where's it got to go? Some of you are young. I'll give you 10 seconds more for the ones that are still thinking about it. I'm having fun today. I might go till 5 o'clock. No! No, don't do that. I'm gonna be divorced. My boss is gonna fire me. I'm trying to watch you, listening to you, and he's gonna look at what I'm doing. It's not my fault, bro. All right. So anyway, you probably already noticed we have this premium wick. It goes above as the next candle above that bearish order block. Your stop would be right here plus 1 tick. That means you're safe. You're inside of the realm of staying within the context of the sell program. You're above you're above the bearish order block, and you're encapsulating it based on the wick, because the wick can be If with this like this, okay, there are times where you will see this formation of a up close candle and it drops, and then it'll spike through. And if it does spike through and there's a wick, what it does is it's going right up into half of that wick or just falling short of it. Then if you got stopped out, that's when I'm going to go right back in again. If I missed something down here and I'm seeing price as it's trading up into that wick, okay, I'm going to get short there, trusting that this was the order block and this is where the damage is being done. Don't think for a second the order blocks are always going to be protected. They're not always protected. Sometimes the market will cover just outside the lines. There's no perfection, but it doesn't change the underlying narrative. It doesn't disrupt any of that. Now, I'm going to give you one more advanced topic, and then I'm going to close it because I am hungry. And a banana and a little bit of orange juice before I started today is simply just not enough. All right, so there are times when you're anticipating a price run, okay, and it's going to reach for a target. If the market is reaching for these upside targets or downside targets and it creates the wicks but doesn't reach the targets, okay, and it starts to create like this reaching element, like it goes up a little bit, comes back down, and goes a little bit higher, and then goes back down. If we anticipate a level, and I'm going to be full disclosure here, I believed at 8:30 that we were going to spike up and hit this new week opening gap. I believed at the time watching it, I believed that that would happen. And it didn't happen right away. It deferred and waited until the opening bell, which is the next expectation because that's the time elements, right? Well, 8:30, we had a news driver. It failed, okay? If there was no news driver that had like PPI, CPI, FOMC, or non-farm payroll, if those things not being part of the equation, if they're not in the narrative or the day that I'm looking for these types of things, if it does something like this, where it creates a candlestick wick like this, and I believe it's going to trade up here. Remember, CPI, PPI, FOMC, and non-farm payroll, those characteristics that are around those types of reports, they're always manually intervened. That means that the algorithm is not letting, or let me say it this way. The algorithm is being interrupted and disrupted, and there's a hand in the mix, if you will. It'll go just short of where you will go later on when the market opens at 9:30, or it'll go beyond where you thought it was going to go and just keep on going. Those are the two criteria. That's the reason why you have to be very careful on those trading days. That's why I tell students don't trade on those days, because you don't know what you don't know. And you're going to discover that you don't know a whole lot, and it's taken some of your ass off of you. Ripped your face off, decapitated you, blew your account, wrecked you, divorced you, okay, ruined you, got you fired because you lose your mind because you lost your account at work, and they're like, what the hell are you doing? Oh, I lost my money trading. Well, you ain't supposed to be trading, now you're fired. You can avoid all that stuff by simply not trading those days at the time of the release of the report. That doesn't mean don't trade them at all. I've made it very plain and clear that you should not be trading at the time of that release. Even on non-farm payroll, if you want to trade the afternoon, it's easy to do that. You can trade 20, 30, 15 minutes after the initial non-farm payroll numbers hit. But trading into them or trying to predict that, you're never going to be good at that. And just avoid it. But with those things said, and all things being equal, if the market starts to rout, and I believe it was going to trade here, and I told you that yesterday, the market's going to trade up and try to gravitate towards that. If the market does create this wick, and then the next candle, we start to trade up, okay? But let's just say that I believe that they're going to manipulate price not because of the 8:30 news, but they're going to leave relative equal highs, or I believe they're going to engineer them, okay? If I believe that, then what I like to look for is this formation. It's the opposite of that, where you're predicting highs, projecting highs with the wicks. Sounds cool, doesn't it? Watch. If we have a day or a session, and I believe that they're going to try to keep HOTS. And I've done this on Twitter. I've done this in execution videos. I've done this in Twitter spaces where I've literally called out every individual candle, or I've mentioned them in other people's live streams where I'll go into their chat window and I'll say, I believe they're going to keep the relative equal highs open or not traded to until the opening bell, or at 10 o'clock. Then I think they'll run it up there, and then we'll use a silver bullet idea. If I have an inkling that the market's going to keep a high in place or a low in place, I like to use this concept here, which is the first candlestick that creates that wick here to there. See that? Now, what happens if it falls short of an objective where I'm reaching for? And this is ultimately where I think it's going to trade to, maybe later in the day at the opening bell or after the opening bell during the opening range, the first 30 minutes between 9:30 and 10 o'clock New York Eastern time. If I think they're going to keep that there, but I'm scalping because I can buy long and sell short in the same day and go back and forth, like I was talking about yesterday. I want to be in a market environment that creates and promotes those opportunities. If it's just one-sidedness and it's real lethargic and choppy back and forth, but real tight ranges, but still drifting high, I'll leave that to somebody else to trade that. And they can tell me they made 300 handles and I'm a dick because I didn't make as many handles there. But then I can come back, the next day with less of a range and make 4 times than they got. So if those instances are there, and I believe that the range is going to stay intact and they're not going to trade to an objective. In other words, I believe that they're engineering liquidity, meaning you didn't know about new week opening gaps and started talking about it. So imagine a time before you learned about them. You might be thinking when this candle was bold-faced bullish, wow, it's going to keep going higher. Who knows where it's going to go, right? Well, if I believe that they're going to hold that range and use this objective later in the day, post 9:30 opening bell, and I start to see a candlestick do this, and I'm long, say I'm long in a scalp. Once it creates this, I want to see, it's still likely to go here. I might be wrong. So I'm going to give it a chance to go one more time to reach for it. If that's the case, then I can take this range here, and it's going to do the opposite. It's the mirror image of what this was doing, where we create the high wick, okay, and it's trading half of this wick here, but this wick and then half of it. It just falls short of half of that. That's reasonable. But what happens when you anticipate a range staying intact and it not breaching it or trading to an objective because they're engineering liquidity? They're deferring a run to a particular price level, but you're in a trade or you're watching price action. It's really fun to do this. You see a candle create this initial wick, then the next candle, it starts running above it. What's this candle's high? You're looking at that price right there. Okay, right here. What's that candle's high? 19,149 even, right? That's what you're seeing right here. This is half of this candle's wick that has yet to form. And what is that? Boom! That's algorithmic. I used to sit on baby pips and troll the fuck out of everybody and say, look, I'm telling you, I can call the highs and the lows. I can do it with individual candlesticks. I can do it in an hourly candle. I can do it on daily ranges, the lower, weekly range. I can do all that stuff. A lot of those things, I'm not going to teach you that stuff. But tell me how this is buying and selling pressure. How the fuck is that just going to just be like that? Wicks do the damage, but it's controlled demolition. It's controlled. It's controlled. They're only going to do what it's coded to do until they manually intervene. And when they do that, everything goes off the table, out the window. Don't trade. Simply sit still. I don't care how much it moves around, how many people come forward and say they made money here, they passed their funded account challenge, or they got this much and they're going to get a payout on it. I don't give a shit. They're not going to do that as a steady diet. Everybody can get lucky once in a while. Once in a while. But you're not here to try to be a one-trick pony. You're not here to try to get good enough to show one broker statement, one day that you did it right. You're not trying to do that. You're trying to be consistently profitable. And before you get there, you got to be able to see what these things do, how they repeat, how they tend to repeat. When will they produce these setups? When do you anticipate a price run? And by having all these things understood, you can clearly see it just in today and yesterday. I have given you the equivalent of literally 6 chapters in a book that I couldn't write in a book. These are subjects that you have to see them in charts. You got to watch it unfold. Imagine me explaining to you in a screenshot picture when it was up here. I believe that it could trade into this fair value gap. I believe it can do that. I believe that it's going to use this as a breaker because we've already ran stops in a level that I knew the previous day. Take my word for it, bro. Trust me. Right away, we're at a point where the people are going to be taking the book and sending it back to the publisher saying, I want my money back. This guy's talking out his ass out of hindsight. But see, you can't do that today. You can't do that yesterday. You can't do that since last Monday when I started streaming every day. You can't do that because I'm giving you things that are over top of real price action live. And let's say I took a picture and I didn't have any of this data to the left, to the right of all this here, and I was pointing to this level here, saying, "Trust me, bro. This is where I think it's going to go." And then I show you the next picture, and it looks like that. That's the equivalent of what you get from people mentoring or using market replay. How is that inspiring? It doesn't inspire me. I would feel shitty if I was trying to use examples like that. Like I have to be out here live explaining this because if it isn't real, I can't explain it. It wouldn't be there. It won't repeat, right? I mean, clearly you can appreciate that. Even if you don't like my personality, you don't like the way I teach, you have to come to the conclusion and be real. If it's there, if it's valid, if the stuff really works, and if I know it, then I can communicate it and explain to you what it's going to do conceptually, why it should do it, and when. Now, if you get those things understood, can you think for a moment? Put your pitchforks and your torches down for a minute for the people that are watching don't like me. You're just looking for little bits to talk about and troll. Think about it for a second. If those two things are equal and true, that there's sound logic here, it really does work, and it can be timed. Would you agree that if you had those aspects under your belt and you understood those components to this, can you see how easy the entries are after that? Can you see how easy the stop loss placement would be? And how the target, where to get out and where to take partials at? Because literally I gave you a clinic on those very things today and yesterday. And you didn't need to see me push a button. You didn't see me do a demo. You didn't see a live account. You watched me explain these candlesticks to every human being that's watching this indice all around the world. We're all watching the same market. It's not like fucking Forex where Tom, Dick, and Harry's fucking brokerage firm has a different high or a different low, a different opening price because they can fuck you in the spread. Everybody has the same price. We're all looking at the same thing. You can't escape it. You can't get around that aspect. It's real. And I'm doing the lowest latency in live streaming. I pulled out the levels. I told you where to focus at when we first got on the stream. I was a little discombobulated at the beginning because I was angry. But I found my groove. But I taught you today 2 forms of turtle soup. Real one, not Wish version, not the Street Smarts version. Okay. But this one here is going to require you to understand a whole lot more because it's going to be very difficult for you to sell short as it's raging into that. And I promise you, there ain't a motherfucker on Twitter, ain't a motherfucker on Instagram that's going to take a trade that's its bold face like that and go short and do that over and over and over again. I can do that. And I have examples of proving it with a live fucking account, not demo. I have examples of that. You can see them. You can watch me enter them. You can see me using a stop loss. You can see the targets being hit. But when I teach with a demo. I teach that way because I'm giving you an illustration inside of a controlled environment that I'm not going to take a loss. I'm not going to realize a profit. And that means that I'm teaching you under that medium's limitations. So that way, there's no miscommunication here. I am not trying to tell you, copy me with your real account. Copy me because I'm pretending to be a financial advisor. I'm not. I am a candlestick whisperer. Okay? That's what I am. I'm telling these candlesticks when and how to move and how to dance. And I'm teaching you the language and the sheet music they follow. That's it. That's all we're doing here. That doesn't mean buying and selling profits. That doesn't mean equity curves going through the moon. It just means that that is our language here. That protects me. It protects you. That means I can talk and be free about what it is I want to talk about and how I want to talk about it. And no one can take it out of context and say, you caused me to lose money. No, I didn't. Absolutely not. Nope. Because if you copy me and you're going to see down in the lower left-hand corner, it's going to say paper trading. And I'm going to execute in price action that's live using the logic that I'm outlining here for my son. And when these trades pan out, you're going to have the problem of thinking, okay, if he can do this, why didn't he do it with a live account? It's because I'm in the United States. There's an organization called the Commodity Futures Trading Commission. They have tapped me on the shoulder in the 90s because I was not using risk disclaimers and I was telling people what to do. And I didn't know that was against the law then. And they served me papers at my aunt's when I was living with her. And I don't want any legal trouble. Not with that shit. So I learned by lesson. Okay, I said, okay, I'm never doing that again. And that's why there's risk disclaimers in my description and at the start of the live stream. And when I see other people live streaming that don't have those risk disclaimers, I'm quick to tell them, you are fucking around and you're going to find out. You do not want to be messing around with this shit. Back then, they loved fucking with people. And I was growing in my community on America Online. So there you go. I don't want to be in trouble because some asshole said, you caused me to lose money and here's the proof. Proof of what? That you traded with real money when I'm trading with a demo account? You're losing that fucking case right away. They're not even going to worry about me because I'm trading in a demo account. You people in other countries, you think you're fucking smart. You leave condescending comments like you're so intellectually superior. Oh, you're trading with a demo account, Mr. Demo Trader. You have no idea what it's like in the U.S. These motherfuckers, our country is so litigious. They're trying to sue everybody, especially now. Everybody's looking for a lawsuit. And frankly, I don't give a fuck if you ever like me or use my information. I don't care. I have enough people out there that have used it. They've communicated their appreciation for it. And I'm teaching my son how to do it. So because you're all watching me teach him. And because it's public, I'm going to use that medium as the same methodology that I've used all along as a mentor. I'm teaching through the medium of a demo account. If I can't do it with live price action, where it's real-time price data, if it doesn't hold up to that, well, it goes without saying it wouldn't work in a live account. That's an easy litmus test. Do you think that somehow that I'm going to forget how to do it because now there's money, real money? It's the same thing. It's the same thing. Nothing's changing. The logic isn't morphing into something else. I'm not excited about or fearful of whatever the outcome of the trade is going to be. That's the whole point of you learning. The whole point is for you to be here so that way you desensitize yourself and strip away all the fear and the concern and the excitement about making money. It shouldn't be exciting. What you should be excited about is you're learning how to read it. You're being comfortable with, oh, I wasn't surprised by that. I expected it to do this. I expected it to do those things. And when you get to that conclusion, it's very fun to be a trader because you're not going to go around with a sharp stick where, I've done this in the past. It's how I got traction. That's how I built my channel initially. If I started a fire, people would come there and see what's burning. And it's usually the people I was pointing to. And here I was trolling them with a demo account, knowing full well I'm clowning them because they can easily come back and say, oh, well, you're a demo baller. Right. I called myself a demo baller, and that's why everybody calls me that. I coined that term. But I did it as a way, so number one, I could be disarmed. What could they say against me? Nothing. They can't say shit. I've already proven that I'm teaching through a demo, but I'm able to see something in real price action that they're not able to do. So I had a lot of fun with that. And sure, did I overstep my bounds and get a little too hard with a few of them years and years ago on baby pips? Of course I did. But that's how you create an interest. Because otherwise, I'm boring, right? I'm an old fuddy-duddy guy that just talks too much. So if I can cause a fire, a train wreck, a car accident, where there's smoke, there's fire, that means that I don't have to advertise. I'll get people talking. And then that's how this channel grew to 1.33 million followers. Not one advertisement, not one. And I'm not liked by everybody. And everybody thinks I'm a fraud. Everybody's like, well, he's not on the leaderboard of Robin's Cup. Are you still in the Robin's Cup? Yes, I'm in the Robin's Cup. But I don't see anybody else. I've given them all this whole year, and not one of them got up there. Well, that's not entirely true. One got up there by an accounting error. But after that, nothing. Apparently, it's not his circus. It's not his monkeys. That's a pretty good one. That's a pretty good excuse. But I was looking forward to, I mean, look, we're going into September in a couple of weeks. I mean, good grief. It should have been easy for them to get up there and at least make a showing, right? But we'll see. We'll see. It's going to be fun in December. December 31st. I might come back on January 1st and wish you all a happy New Year on Twitter. I'll come back just for that. But I taught you a lot today. I taught you a whole lot today. And some of these elements I had no interest in ever sharing. And, granted, is everything that I taught here going to be applicable to every one of you? No. Some of you had lots of your questions answered. Some of you have new questions that came from this, and that's great. That's great. Write those questions down in your journal, okay? And you'll see by the natural progression of me doing this over live streaming and talking about price before it happens and watching and giving you further details like I was doing today. I taught the only two elements of turtle soup there is, okay? Buying below old lows or selling above old highs. There's only two forms of that. It's trade direction and change in a state of delivery, which is, this is a turtle soup for that. It's not the Street Smarts version of it. I just like the name, okay? I love the name. If I had another cooler name, I've used the idea in that name since 1995. So it's kind of like, why change it? I always give credit to the inspiration of the name and the idea of stopping out somebody, because that book, those two authors, they were highly influential to me understanding being stopped out and going the other direction. Like it didn't cross my mind that was a thing. That's how green I was as a trader in the 90s early on. But it solidified it. I was like, oh shit, that makes perfect sense now. Oh, no wonder. Okay, that's what happens to me when I'm wrong. I'm getting stopped out and it's going the other direction, and I'm not aware of what's going on, and I'm in shell shock, like a deer in headlights. I'm staring at it, watching the price keep going, and now we can see when it changes, and we can be a part of it. And when we get that run that we waited for, that we went into the trading day looking for, not, well, I don't know what's going to happen today. Let me just find something. Fuck that. If you do that, if the start of your day is like that, you have an 80% chance of leaving the day unprofitable. Write that down. If you're going into the trading day and you don't know what to expect, you're waiting for more information, and you are going to make a trade, come hell or high water, you're going to trade. You have an 80% chance that you're not making money that day. I'm telling you, that's the gospel. Contrast that with, I know what I'm looking for tomorrow and the rest of the week. This is where it's probably drawing to. If this level or that particular level doesn't get traded to, I'll give you a perfect example. Yesterday, before we closed the stream, I told you that this new week opening gap here from the July 28th, look and see if it's not in there. It's there. And I talked about the daily objectives on NASDAQ. The volume imbalance, the short-term high on the daily chart, all those things could be factors for it to if it's going to continue higher. That's where it could gyrate to, because it's an election year. They think, the general public thinks the stock market is a measurement of the economy, and it's not. So if you know, like I was telling you yesterday, that this is a likely upside objective, well, that means when I start the day at 8:30, when I was watching this, I wanted to see it trade up there right at the 8:30. If it would have done that, hit it, and then at 9:30 went above it and then failed, I would have expected something like this at 9:30 opening bell, because it would have traded to the objective I gave you yesterday, and it did it on the first leg at 8:30, and then left that smooth like that, real easy, didn't go above it at all. Then at 9:30, if it would have poked above it one more time, that would have been a turtle soup, and I would have said right here, screenshot that while it's bold-faced up, and then when it's dropping down, I'd say that's exactly what the turtle soup looks like as it forms like this. But you have to know what you're looking for. If you don't know what it's likely to reach for, before you start looking at your charts, like you have to have notes. When you close your session out today, when you're done, you're not looking at the charts until tomorrow, whatever the next session is for you. If you don't have levels that are key to you where you think it's likely drawing to, you don't know what you're doing. If you're going into the day and you don't know what you're looking for and you just don't know, the top of your notepad and on your charts, type it out. I do not have to trade today. Let that be a reminder, because it's so easy to talk yourself into a trade. It's easy to do so if you're watching me. It's easy to do so if you're watching other live streamers. And if you don't know why you're doing what you're doing or expecting what you expect to see in price action, in the moments before you turn your systems on, your computer, your phone, or whatever it is you use to watch the charts, if you don't have that information ahead of time written down somewhere, either in your charts annotated or on a notepad, if you don't know where it's likely to be drawing to next, do not give yourself the open invitation to go out and simply trade because now the markets are trading. You have to exercise a great deal of discipline and be responsible. Now, I have a lot of experience. I've been doing it for a long time. There may be moments where I don't have a bias. And I've shown this in my mentorship when I was doing live streams for them. That was part of the mentorship. I would tell them, okay, I don't hold a hard bias right now. So I want to see what we were going to get at the opening bell. I want to see how they use the opening range between 9:30 and 10 o'clock. Okay. What I'm saying is I'm not holding a bias that I can trust that's going to lend to, it's going to draw higher to this premium array, or it's going to draw lower to this discount array. I don't know which direction it wants to do at the moment before the session starts. And then when I look at the opening range, then it gives me more information. Then I can say, okay, well they made this area jagged. So then I'm going to look for something that's a smooth area. Or if it's a high impact news driver, then it's going to be what? It's going to be the liquidity below that. So we don't need to see a relative equal high or relative equal low when there's a CPI number, PPI number, or FOMC, or a non-farm payroll. Those are the characteristics that you do after the report. You look at how they're going to come back on the individuals that would have made money on that run. I used that logic yesterday, but I also told you in advance, if it goes higher, I'm not interested. I'm not interested in that. So I didn't change my protocol. I just told you this is a day I would not be interested if it just keeps grinding higher. I won't chase that. I won't worry about it. And then I want to be a part of a day that has like this. Like we had really nice. We had the mess here first. Then it went up to where I was telling you yesterday. It went to it perfectly. Then we watched this area here. It didn't give me an entry if I would have used it because it's not inside the fair value gap. It wasn't booking that price. But the logic was it should move from here down to the midpoint of this wick. We watched it happen. In this fair value gap, it traded up into that, and it returned back to the 6 o'clock opening price, which is not on here anymore. But we went to the next quadrant level here, which is the lower quarter, and then the low. And then we would be attacking the liquidity resting below that. And then I gave you measurement strategies on how to take the high, the low, whatever the quarter percentage of that range is, projected below that low. That's a pretty good ballpark figure. It's not going to give you the lowest low, but it's going to give you something that you can be happy with. And then we get all this range back all the way up. It pierces this high, and then we broke right back down. And where does it trade to? Look at the bodies of that candles right there. Look at that. You think that's random? Boom. Swept it, and now we're just gyrating around. I would not be interested in trading anymore today. I'd move to the sidelines and I'd be content with what we observed today, what has been logged as price action. I would break this down. Okay. I would go through the whole individual day from a 1 minute chart, a 5 minute chart, and a 15-minute chart, and then annotate everything like I'm doing here. There's other things in this chart. I don't want to do everything for you because if you just screenshot my chart, there's your journal entry. And then you put your annotations here. That's not what I want to do, Caleb. I want you to go through all of this. And that goes for all of you watching too. Don't just take my chart and screenshot when I have annotations on it and say, I'm journaling. Yeah, you're not. You're fucking collecting stamps. That's all you're doing. That's a stupid fucking hobby. It's like collecting baseball cards. What the fuck's the point of that? That's dumb. Just do something else. So if like collect colognes, that's a better hobby, right? You see how everybody has their own personality. And some of you probably have some really good money in stamps or maybe even baseball cards. I think it's stupid, and some of you probably think it's stupid for me to have colognes. It's $430 of cologne. That's dumb. Well, it's what I like. You like baseball cards. You like stamps. You like whatever. Everybody has it's different strokes for different folks. But in trading, it's going to be the same thing. I have lots of tools, lots of things to get into a trade, lots of criteria that you can apply and make it yours with your personality. But your model that you arrive at, if you made it available to other people and saying, this is what I do, I don't have a problem with that because it's what you learned from me. You could go on YouTube and say, this is my model. It's not a mentorship. This is what I do, and this is how I'm going to implement it. And then live stream. I've encouraged my students that want to do it. I'm not trying to talk them into it. I said, if you want to do this, if it's in your personality to do so, and you know your model, you don't want to discover your model by doing that. Okay, there's a couple of live streamers out there that are doing that right now, and that's why they're not doing well. That's exactly why they're not doing well, and they're trying to sell courses too. So that's a stupid ass fucking procedure. If the person's failing and losing their funded accounts, and they keep resetting and they keep proving it to you because they show you the numbers. Here's the account numbers. Here's my new. I blew the accounts. All that stuff, and they're trying to sell you a fucking course, no matter how cheap it is. You're an idiot if you buy that. I'm just saying. You can hate me, call me whatever you want, okay? But you're a fucking idiot if you pay money for that. That doesn't make any fucking sense. Now, I have students, okay? I have students that have made money. They have placed on the Robbins Cup. They have literally taken hundreds of thousands of dollars out of several of the funded account companies. And they aspire, and some of them are actually doing their own mentorship, okay? I took the interviews down. In case they haven't noticed, I'm thinking public knowledge. I took those interviews down because now what you just did is you entered a business of education. And you went in that business with my name attached to it some way, shape, or form. I am not going to endorse your business because I don't know what you're doing, how you're conducting yourself as a business person. I'm not saying that that's right or wrong. I'm just saying I have to distance myself from that. I had students that started their own funded account company. And to my understanding, it didn't do well. Okay. I don't know the ramifications around it, but apparently it didn't do. And I may be wrong. I don't know. But I know that at one time I had this state publicly that has nothing to do with me. I'm not invested in this. I have no kickback from it. I'm not promoting it. I have nothing to do with it because you're messing with other people's money. And when you start collecting things as payments and you're calling it a mentorship and you have my logo, or you're saying ICT in the videos or the advertisements or whatever, you are indirectly pulling me into that. And I'm saying the fuck you are. I'm severing that. I am by myself. If anybody learns from me and they want to make mentorships, okay, I've already said this on Twitter Spaces. If you have made money using what I taught and you have made it your own model, you're not out there trying to pretend you invented something, but this is what you arrived at using the information. And then you show people how you use that information. I don't have a problem with that. I will never fuck with you. I will not say you did this. I'm not going to talk shit about you. I'm not going to go in your comment section. I'm not going to talk shit about you and say, oh, you're a dollar man, your mentor. I'm not talking about that. The people that are assholes that are trying to mentor, They know who they are. They fucking know who they are. But my students that have made money, they have proven they've made money, and I've encouraged them in the Twitter spaces live, publicly in front of everybody last year. I said, you have other ways of making money. Okay. You may not get to the point where you're making big withdrawals from your live brokerage account or through a funded account company. You may not be able to do that real quick. But a lot of you think that that's the only way to get there, to make your ends meet. You don't. We have a huge community. And yes, there's a small sect of it that's assholes and they're just toxic people. And for the most part, I think it's fun because it makes it livens it up for me. Because if it was just everybody saying, "Oh, I love ICT's concepts. I love ICT. He's the next best thing since Raisin Bread." Well, that's fucking boring. That's boring. So it's good that once in a while we have folks that say, "Yeah, I don't think that shit works," or "This guy's a clown," or "He doesn't do this and he doesn't do that," because that causes you to think about it. Wait a minute. Am I learning this because I like the person ICT? Am I supposed to like everything about ICT to make this stuff make money for me? Or am I really supposed to be focused on what he tells me to do is don't worry about me. Don't worship ICT. Don't look up at ICT as a fucking guru. I'm not your Forex Jesus. I'm not the futures Jesus. I am a man. I am fallible. I am a sinner. I can mess up just like anybody else can. But for the folks that spend too much time worrying about the person, the character that I allow for you all to see, you don't realize that that is a test. It's a test. Do you care more about image or what works? Because if you spend all the time worrying about the person, and I've told you all along, we're not a team. If you're on the other side of my trade, I hope you lose. And you could be a long-term student. If you're on the other side of my trade, I want you to lose. That's trading. I didn't hide it. I didn't lie about it. That's the nature of it. I'm going to eat. If I'm on the other side of your trade and I'm wrong and you made money, I'm fucking impressed by that. I'm not offended by that. I have students have showed, hey, look, you were calling for this level this day, and I went like this. I hope you don't think, dude, I'm not taking offense to that. I love that. I love that. That's an award. You need a trophy for that. I'm not offended by that. But some of you think, because I've done such a really good job of being a certain character online, some of you think I have very thin skin. I don't give two fucks. I really don't. But I like to push buttons. I like to get people talking. I have mastered social media without any advertising because I know how people think. I know how to control what people think about me, how to inspire them to think about certain things, how to lead them along, and how to cut them off. Give them just enough that they want more, and then over deliver every time I want to do it. Everything I do is calculated, except for this morning when this fucking OBS wouldn't start up. I was mad. I was mad. If I keep talking, I'm gonna get mad again, so I can't talk about it. But I had students come to me that are mentorship students, and they have asked me if I will let them translate my videos in their language, and the answer is no. No. If you think you're going to put them on YouTube, and I know there's a couple channels that they're about to get wiped out, you do not have my permission to do that. Okay? You don't. If you want to take little clips and put music around it, I've never fucked with anybody. I've never done that. I don't have a problem with that. Like, I don't look at that as, oh, that's copyright infringement, because you're taking a small little piece of something and you're making a little artistic little thing, and some of them are actually kind of cool. I don't have a problem with that. But if you take my entire lectures and you turn them into books verbatim and you put them on Amazon, like, that's a dick move. Like, that's a dick move. I had a guy, it's Spanish, he put a whole bunch, he even has my pictures right from the mentorship videos. You can literally see it. It says I see mentorship. It's broken up, like he's trying to hide it, but I had such a huge, just a obnoxious watermark with the usernames and the user groups, and it was a mess. But I had to do it because I had so many people leaking it. And I was like, you know what? This motherfucker went out there and went to Amazon and they published this book. And all it is a watered down version in Spanish of the things I say in the mentorship. And it's trash. It's literally fucking trash. So no, you don't have my permission to translate any of my videos in your language and then put them on YouTube. No, you don't have my permission to translate them and sell them in your own country. So there you go. I don't extend that privilege to anybody. Do you have my blessing if you want to use the information, get good at it, build your model, go out there and create a YouTube channel where you use the model and you actually show them this is how I trade, and then you do it and grow the channel to whatever it could be bigger than mine. I would support that. I would congratulate you. I would lift you up. I do it with Tanja. Um, there are others that are slowly starting to find their groove, and when they get a little bit better at what they're doing, I'll push them too. I'll be in their chat. Just because you're my student, I'm not going to be in there rah rah, cheering you on. I don't. First, I don't have time for that. But when I used um, oh gosh, what's her name? I can't think of her name now. I'm embarrassed. I shouldn't say it like this out loud, but a young Asian girl. For the life of me, I cannot. I haven't looked at her channel for such a long time. Um, I can't remember her name. Okay, but I was trying to get my daughter to watch her and say, look, she's going through the mentorship, and here you go. See what she does and see if that inspires you. And I've come to the conclusion my daughter's she's never going to trade. But the I know some of you right now are screaming her name. I just can't remember her name, and I'm embarrassed. I'm sorry if you're listening. I have 1,000 things fighting to be in the front of the line of my head right now. But then you have Tanja, where she's live streaming, okay? And if I was her, I would have moderators in there cleaning up her chat, because when I visit there, I see some very vulgar things said directed to me, like I'm lusting after her. I see her as like my daughter. She's not physically and biologically my daughter. In case a lot of people think that she's not, but she literally looks a lot like my daughter, and her mannerisms, the way she does her eyes, she talks with her eyes. And that's one of the first things I noticed about her that resembles my daughter. But her face structure looks like my daughter, and she's using my stuff, and she's doing well with it. Does she lose sometimes? Sure, she does. It's an interesting thing for me to watch her go through some of the emotional challenges when I see her trying to talk herself out of the stress she's feeling. Sometimes she doesn't do it as well as I'd like to see her do it. She doesn't do self-talk correctly. She'll say, oh, I don't care. I don't care. And she'll roll her hair back. She'll sit back in her chair. They're all tells that she just wants to say, fuck it, I'm turning it off. I'm done for today. But she knows she's live streaming. I find that interesting. I don't find pleasure in seeing that uncomfortable part, but that's the things that you're going to be met with. So if you're going to learn how to trade and do really well and you want to be a live streamer and YouTuber, sure, you can make money doing that. Absolutely, you can make money doing it. And you can do it without being drama. You don't have to talk bad about anybody else. You can just stay in your own lane. And that's the best way to do it. Because if you're going to do the live streaming stuff, everybody's going to come there to watch you fail. That's the first interest. They want to see you fail. And especially if I'm anywhere in that equation, like if you learn my stuff, because they want to go in there and they say, oh yeah, ICT stuff doesn't work. But then these people are making money. The levels I'm calling out in their chat windows, it's happening. Okay, they want an engagement, they want an interaction, they want a response either from me or the person doing the live stream. My advice would be, don't even have a chat window. Live stream your stuff. Use the model that you built around this concept, and let your channel grow without any drama. Don't give a stage to trolls. Don't give a stage to people. Don't even have a comment section on anything. Because honestly, even the good stuff is not good for you. too much love, too much sugary, like I love your channel. Like you don't need to do that. They have a little function on the videos. It's a thumbs up. I wish they would bring back the thumbs down. They have it there so you can do it, but you can't see it. My videos generally are 97 or higher percent liked. So that means I have those same type of guys out there with their sock puppet accounts, and they're going in there and they're doing the thumbs down stuff. And that's okay. I mean, if I have a 70% like rate, and some of you probably want to see it now, I want to see that there's that many likes. I don't look at that stuff, but I ask. I'm sorry, the folks that ask me in the comment section, how many people do a thumbs down because you can only see the thumbs up. My ratings are 97%, mostly 98%. They're liked. Okay. Um, I wish that there was a thumbs down video. I wish they would bring that back. It's not fair that if we're going to have the thumbs up, that there should be a thumbs down too. So that way you can see that a lot of the things that people have fallen victim to when it has anything to do with me is it's the other people talking about me, and that influence keeps them from ever looking at the stuff I teach. And if they catch them early with that, they think that that's hurting me. I'm already here. Like you're not going to take me out of where I'm at. I'm already here. Like I'm set in my ways. I'm done. Nobody's changing nothing. And after this Caleb stuff, like if I ever make a video again, who the fuck knows? I don't know. But I'm not trying to be a YouTuber. I'm not trying to do that. But I can tell you that if you have content that people like, that your personality is friendly, and you're trying to be genuine. So if you are showing any kind of emotion that's real, and I got the most feedback when I was on Twitter with the Twitter Spaces, people were asking me to go back to that. I'm never going back to Twitter. I'm never going to go back to there. I'm not going to remove my account, but I have entertained the idea of a podcast. Okay, I've had several people, several companies come to me and like ask me what my thoughts were about it, and I said this year I'm not going to make any decisions about it because I have this project here. And before Caleb stepping forward asking me to do this with him, I just wanted to focus on just unplugging from social media, unplugging from YouTube, and just go back to being me before Baby Pips. Like I just wanted to be back to that guy. And do I miss doing Twitter Spaces? I do, but I don't think it's a climate where if I'm just going out there saying what I tend to say, I don't want any more drama, because people in high seats, they're starting to look for people that have a high opinion or a certain opinion, and it's not that important to me. When it's live, I have a tendency to go off the track and ramble and talk about other things, and a lot of you really want those other topics. Like you want the tinfoil hat stuff, you want the stories of me going through stuff, and sometimes when I get emotional, you've heard me cry. You hear me cackle and laugh when I'm going on. I laugh at my own jokes. Um, I've learned that those elements where I was allowing my emotions, where if you listen to the old videos where I'm just droning on and it's just monotone and boring, I'm not showing any kind of emotion at all. They're great for lullabies. They'll put you to sleep. But if you listen to, you probably can't sleep through a Twitter space because invariably I'm going to go off and I'm going to, elevate and animate myself. And I've done it a couple times. Some of it was scripted where I wanted to do it for shock value. And other times it's just organic. And I would swing from one spectrum to the next. And that part of me, I wanted to hide that from the public. Like I didn't want people criticizing me over that aspect. And I found that because of that aspect and being real and genuine and letting it be organic, um, that's the part that people like the most. Out of everything that I put out in content, they like the lectures where I'm like that, where it's not stunted and stilted and wooden. And maybe you hear me talk about a painful moment and I end up, showing my emotions where I would have never been comfortable doing that, on Baby Pips. I had no interest in that. But my advice to someone that wants to learn how to do this, and if you're contemplating doing it and you already know how to trade well with it and consistently, doesn't mean you trade every day profitably, but you're making money over the month, over the year. and you want to get another income, I think that if it's in your personality to do so and you're comfortable being open and transparent, I think that live streaming like that stuff, saying, here's my model. You're not trying to sell the course or the model, okay? You're saying, this is what I'm doing. And me implementing it and using it in front of you, win or loss, that's the content. That's why I'm doing this. Um, I'm doing it because it's going to give me another stream of income if I'm liked by other people, and it doesn't matter if people come and watch me. I'm going to be trading anyway. So if you go in with that mentality and you're not out there trying to talk about everybody else. See, I talk about methodologies. I don't talk about people. I don't point at people because I don't have a problem really personally with anybody. I know people don't like me. I know that they've done terrible things and said terrible things about me, threatened this and threatened that. And I get it, okay? But that's not changing shit. It's not doing anything. It's not going to change me who I am. I'm not a drama person on a family level, on a personal level. I don't do those types of things. But I can talk shit about your methodology. And if you take odds with that, then that's great because that's the button I'm pushing. Because I want that person, whoever that is, and it could be a lot of you, to go out there and defend it. If you champion that stuff, you'll go out there and champion it. You'll go out and call it live, explain it, and you don't have to even do a demo account. Just explain it real time as it's happening. I like watching people do that, and it doesn't have to be my stuff. Because if you know what you're doing and you're comfortable in your own skin, and you're not trying to be something that you're not trying to pretend to be something superior, but really not doing anything, you're not going to grow. You're not going to get an audience. You're not going to be able to retain that. But if you do the things that I have discovered are actually what people want, if you have something that works and my stuff works, you have to find it where it works for you, though. You have to have a model that's comfortable for you, trading a time of day, an instrument that's conducive for you to feel comfortable. You're not trying to reinvent anything. You're not trying to amplify it or make it better or tweak it so that way you can say, well, I took this and made it better. That's what everybody wants. Everybody wants to do that. And you don't need to do that. I have so many weapons. All you got to do is say, you know what? I like the katana. I like the bow staff. I like the sai. I like the nunchuck. I like the shuriken. I like the takagi. These are all weapons, okay? No one weapon is better than the other. In the hands of someone that knows how to use them formidably, you don't want to be dealing with that. It's a bad day. So if you go through the motions of going through what is it I teach, the first thing is how to read price. Where is it going? Why is it going? And when is it going to move? That's your first level. But then you find a model that tells you how to get in and where to look for a trade exit point and where the stop loss is. That's your model. That's it. That's a very simple thing. What makes it hard is you're trying to figure out which one's the better one. And if we're going to be honest, that's what you're all struggling with. You're listening to so many influencers and other people that said they study with me. Oh, it doesn't work. Now I'm doing this. Oh, he complicate. I don't complicate shit. But it is a complicated matter for you to settle in on what you're comfortable with because you have to sit down and go through the motions of figuring out what makes you tick. Can you trade against the grain and be a trader that goes short up here? I'm going to bet money that most of you aren't doing that. Can you grow into that? Yeah, that's what I had. It took years and years and years for me to do that. Long time. But being a part of a move that's easy to see and engaging that's easy stuff. That's why I say entries are easy. Targets are easy. They're all finite things. But knowing where the market's going to go, that's the uncertainty that evades most traders. And for the ones that know where it's likely to go, where do they mess up? They mess up by trying to force too many things in their model, and it gets analysis paralysis. I know where it's going, but I'm afraid if I take this one and then I see something else forming, and then I'm trying to do too sort of a stop loss. It's trying to be too tight because I'm trading with too much leverage. Right. There's your problem. Trade with one contract. Because if you can't double your account with one contract, you sure as fuck ain't doing it with 15 and 5 or whatever else you think you're going to do. You're not going to do it. All you're doing is amplifying the stress. And the problem of holding onto a trade while you're in that with over leveraged contract size or lot size if you're in Forex, you're going to care more about the fluctuations of profit and loss. It's taking money from me, it's putting money in there. I'm at a new equity high in the trade. Oh shit, I gave back half of the trade. I probably should have got out. Now you're worrying about something that's probably never going to be a factor if you had one lot on or one contract as a futures trader. That retracement here, like if you were short here and you watch the trade back up to there, that's about 50% of a retracement on an open position. I'm not fearful of that. That's why I'm not in a rush to push my trades real fast, taking my stop loss, jamming it into a certain measure of guaranteeing big profit. Because I know the first return after a nice entry can go as much as 60% of a retracement, meaning that it could trade right back to the area I entered at. And that doesn't change anything. It just means that, hey, that might be an opportunity to add another portion on. Or, okay, is it really spending too much time back at that 60% of retracement or more than 50% of what I've already seen as an unrealized gain? In other words, if I'm in a trade and I say make it easy, say I have $1,000 in open profit, but it's not been realized or closed. And then it retraces against me back where I'm down over $500 and up in open profit, but not realized. I haven't closed the trade. It hasn't gone back to my stop loss. It hasn't gone below profit, but I'm now only up $450 or whatever. That doesn't make me second guess the trade or change my mind about the trade. Oh, I better get out. And I'm going to counsel you to watch this portion where I was covering all the stuff in here today, where it kind of helps you formulate a process or a mindset on anticipating this ebb and flow, this give and take that the market's going to do while you're in a trade. And if you don't get accustomed to seeing some of that profit come back into the marketplace and come out of your account, and trust that that's a normal process. It's normal for that to happen. We all want these types of trades where you get short here and it just runs away quick. It doesn't even have any retracement at all, ever. Every new equity high stays there and adds more to it until the trade hits the limit order and you get out. That's not realistic. But I have found that when I was giving my examples, people would say, I see your examples and I want my trades to pan out like yours. But they don't realize is I was speeding them up because I had to force them on Twitter inside of 1 minute and 20 seconds because that was the time limit I had to have for those trade videos to be shown. So I'd condense sometimes an hour, maybe 45 minutes, a 30-minute trade. I would speed it up, not because I'm hiding anything. There's nothing to hide. It's all there. You can see it. But it had to be forced into a small space of time. And then I would record a song and place it over top of it. But because they would watch those videos, it was actually, and I didn't realize it until after most people were coming back to me and giving me this feedback. They would say, well, I'm in these trades and it's hard for me to hold them. Why? Because you watch my trade videos in the span of a truncated song of 1 minute and 20 seconds. You're expecting your profit objectives to be met in very super hyper speeds because what are you watching? You're activating your reticular activating system, seeing these things happen on a sped up chart with a real execution in live market conditions. Not always a demo. Sometimes it was in a AMP account. Sometimes it was in a TD Ameritrade account. They're real brokers. That's not a paper trading account. That was real. But these videos, these examples, because they were sped up, you're being entertained because it's me doing an execution. You're being entertained because there's a song, and not everybody, but a lot of people say, I like your song choices. And then you're watching the duration of it. So what are you taking in? Your subconscious is saying, when I take a trade, I'm going to have that fast run. And I no longer want to do those type of videos because the feedback I got, nobody was complaining about that video or those videos. They were saying, please give us more. But what I was getting back in the comment section or emails, they would say, I've watched your videos and I'm inspired by that. But when I get into a trade, it's just I can't hold on to them because I don't have the patience. And I realized I'm probably a very large contributing factor to that because of the way I was giving that sped up example. I thought I was doing something cool And I still think it's cool, but through the lens of a new student, for someone that's brand new, that's never really done it before, it kind of like, without not being the intended purpose, it has an effect on them by framing an expectation in terms of the duration of how these trades can pan out. It makes it feel like they're going to be very fast. And if you realize that a lot of those videos were longer than 40 minutes in duration, they're not all smart money concepts delivered in 5 minutes. It's you're trading an hour's range. Okay, and there's a nudge, nudge, hint, hint for you. But the point is, these moves, these runs, because I've sped them up for the purpose of fitting into the bandwidth and time constraints that Twitter placed on me, and adding a song to it, I supercharged the allure around it, and I showed the stuff working. But you're getting trained, you know, indirectly, but not by design, to anticipate the trades panning out just like that in speed for you based on time. And it was something that no one complained about, but I have come to the conclusion that that is the large contributing factor, because what else would it be? What else would it be? Because if you're seeing the trade examples, and 95% of them were always sped up and shown on Twitter. It was a way for me to inspire you to say, this stuff works, this is what it looks like, go through your charts and find the same information. But mostly it was just people watching it for entertainment value and saying, I'm inspired, I'm going to go out and try to trade like that. And then they're uncomfortable because now they're in it. It's been 30 seconds. It's been 2 minutes and 50 seconds. It's twice as long as the time limit that they were used to watching my trades pan out, because they've been sped up just to make it fit the time window that Twitter videos, because of my membership or whatever the limitations were. It used to be just that was the limit. You couldn't go beyond like 1 minute and 20 seconds. So my videos would always be like 1 minute and 19 seconds or whatever. And sometimes they would reject the video and I have to compress it again to just get below that their little limit they would have on me. And my understanding is, I think you can make a longer video now, but I don't give a shit. I'm not making those videos anymore. So I've learned a lot as a mentor. Like I've taken things that were directly given to me as feedback. I've looked at things that I felt like I was doing a good thing, and other people didn't realize it, and I'm saying it now. And maybe some of you might think to yourself, yeah, it makes sense. That it probably was a contributing factor. And now I got to stop thinking about that the trade has to pan out fast, and I have to submit to time, which was the very first thing I taught when I was on Baby Pips. Just relax. You got to submit the process, submit to the time. It's going to take you much longer, and your trade doesn't have to go fast to your target. It's fun when it does. It's absolutely fun when it does that, but it doesn't have to do that. It doesn't have to do those things to be profitable. So anyway, I've said a lot of stuff today. I'm hungry. It's almost 2 o'clock. I've given you a whole lot of information, and I probably talked to you through your mundane workday. I've probably kept you up in other countries thinking, I must see with this stop talking. I'm afraid I'm going to miss something. You're not going to miss anything. Okay, it's all going to be in the replay. But I've had fun today. I'm hungry. I'm going to close this one. I'm going to wish you all a very pleasant day, evening, whatever. And Lord willing, until I talk to you tomorrow. Hopefully, I'm going to try to start the stream early, but it'll sit there with my mug looking at you, just to make sure that I got everything going on. That way, hopefully at 9:15, it'll go off without any hitch. But today was a very technically challenging day for me. It wouldn't comply. It wouldn't work with me. So it took me out of my train of thought. But I think I salvaged a good one today. I gave you a lot of information. I covered the turtle soup stuff I wanted to talk about, and everything else is there. I'm going to try. I can't promise that it's going to be successful, because I tend to go on a rant, and every time I say we're going to close it, we go another hour. Keep going, ICT. You said 4 o'clock. We're here for it, baby. But the live streams, as I go through and progress on different subject matter, I'm going to try to be mindful of transitions from one subject matter to the next. I know these are very, very long catalogs of information. So what I'm entertaining the idea of, I'm not promising I'm going to do this, I'm entertaining the idea. That means I might try to do it going forward. When I talk about specific elements of the discussion, like for instance, when we were talking about the turtle soup aspect, okay, yesterday I was going to talk about that as a subject matter today. But I didn't go right into that subject matter because we were watching live price action. I was giving you counseling over what to expect, what not to expect, telling my son, this is what you're looking for, this is what's good, this is what's not good. All those things being germane to the discussion and why I'm even doing the live streams. But I want to kind of like write down the time when I transition from one subject to the next, and then I will give you in a comment underneath the live stream, or maybe in the description, I'll give you a breakdown of what I'm covering in there. If you are one of my students that have always done this with my videos, I have some students that literally will give you the minute marker of every fucking video I've ever made and what I was talking about. Like they're amazing at it. They catalog and index things so well, but they were doing it for themselves. And sometimes I would promote those comments in the in the videos, so that way people can say, okay, well they're doing it for themselves, but I'm going to borrow that so that way everybody can see this is where I'm talking about that. That was actually a cool thing. I didn't really go through and verify all that stuff. So what I'm going to do is ask you all as the community, not that all of you need to do it. Okay, it's not a homework assignment because there's a lot of things going on in the world and there's enough for you to go through with the content. But for people that just do this anyway, and you write down and you log where I talk about certain things in these long videos and these long live streams, if you're willing to, you can leave that type of information. Just leave the title and the date of the live stream. Just comment and reply to whatever the most recent community post is. Because when I look at the posts, I just go through all the video posts that say for review. All my comments generally are for review. So I can go through and see what people are saying. And if I get at least two or three of you saying that this is generally where I'm changing gears and I'm talking about, this is where he starts talking about turtle soup, and this is where he's talking about entry strategies, this is where he talks about stop loss placement and how to use smaller stop losses. I cover those things today, okay? And I know that there are people that are trying to spoon feed the people that don't want to sit and listen to the entire thing. So I'm going to strangle them, okay, because they're trying to make YouTube channels out of splicing right to the nuggets, okay? I'm going to cancel that whole necessity for that by putting timestamps in these long-winded presentations. So that way you can go in by index and say, okay, this is the video. He talks about this, and I can click on it. I'm not saying I'm going to go through the business of going in and doing the hyperlinks right to that minute marker. But I would appreciate it if some of you want to help in this regard. It doesn't mean I'm going to make your comment visible. It just means that, if you're already doing it, don't start doing it if you don't want to do it. Okay. But if you're already doing it, if you want to make that available to me in the comment section, it would be a personal matter of me appreciating that and saying thank you for your assistance with it. But going forward, I intend to do that. But for the ones that we've already done, it's been 6. This is the 6th live stream, I think. Yeah, 6th one. So the 6th, the 5th, 4th, 3rd, and 2nd, and first one. Whenever I'm changing subject matter or I'm amplifying something and then I return back to something that was being discussed earlier, that would be beneficial to other people because I get a lot of questions and they think I have an index of what video at what time in the video. I don't do that shit. But I can see a use for it because I am very long-winded because I'm giving a clinic. Like I'm literally writing books audibly. Like I'm doing an audio fucking book every day with you all. I'm literally giving that much information. And you think it's just a small amount of information. You could cut this down to 5 minutes. The fuck I can. Okay, you can't. You cannot do today's lecture in a small little span of time because there's so many things that are contributing elements to it. And yeah, I had a lot of fluff and talking in it, but you still can't reduce it down to a very, very small video. There has to be other things, and you're going to need other videos and lectures where I've done other discussions to amplify and further explain what you don't fully understand just because I talked about it or mentioned it briefly here. Like the breaker. If you've never seen the breaker before, what the hell is a breaker? Where is the breaker's entry mechanism? What validates it as a breaker? These are all questions you probably, if you've never heard it, you're like, okay, what is a breaker? Where can I find information on a breaker? How do you trade a breaker? What validates a breaker? What invalidates a breaker? So I already know the questions you're going to come up with, but they're already answered in other videos that you should have already watched before watching this one. But you can't be that way if you just discover the channel. So you got to take it in bite-sized pieces and just know that they're in the mentorship videos, the 2016 and 2017 playlists on this YouTube channel. Go through them, okay? Um, and that's it. I'm going to get off here. I wish you all a very pleasant day. I had fun. Hope you learned something. If you did, if you liked it, enjoyed it, give me a thumbs up. That's our currency here. There's no PayPal links required. And I'll talk to you tomorrow, Lord willing. Until then, be safe.